All right, traders, it is Monday, February 28th. Last day of the month here in the S&P futures, the QQQs, and the IWM and the Dow. The whole damn thing is down here a bit this morning. So you take a look at the QQQ futures. We're down about 1.3%. S&P 500 futures are down about 1.4%. Your small cap futures down about 1%. And the Dow Jones futures down about 1 and change. So far here, and mind you, it's 7 a.m. Eastern, so the market opens up in 2.5 hours. But a little gap here so far. Here's a few sources I follow on Twitter as far as news. Obviously, all the news over the weekend and going into this week's trading is about Ukraine and Russia. And obviously, anytime the word nuclear starts getting tossed around, things get a little bit feisty, so to say. So interesting times for sure. But I want to give you a few levels to focus on here today. Before I give you the few levels for today, just remember, it's not the best looking structure here for the market. So, you're under that weekly 21 with a bearish squeeze in the Qs, the S&P, the Dow, the small caps. Be a little bit careful about buying the dip. And I think if anything, you can take the dip if you're going to buy it into a few levels that we're going to focus on here. So your levels for today, and we'll just look at the ETF. So for the S&P 500, let's clean this up a little bit. So currently we're going to open up around 431-ish. Cool. But in terms of support, and if the bulls, if they lose this level of support, I think things roll right back over. Just kind of line it up here with your January lows. So that's like 430-ish to 428-ish. So let's just call it 428. You can see previous support over here. You get your January lows. Get the flush last week, the big rip back through it. So as of right now, we're going to open up a couple of bucks above that key level of support. So with a daily squeeze firing short and a weekly squeeze kind of potentially teeing up here, if we lose that level of support, the January low and also the October low, I think things could get pretty nasty. So 428-ish is your key level there for the S&P to the downside. And in terms of the upside, you've got a lot of resistance coming up. There's the 21 EMA and the 200 SMA from the daily chart. So obviously that's kind of a cluster. And on the weekly charts, you have your 8 EMA, your 21. And if you look at the hourly chart here, pretty much, the name of the game since we started to puke it up in January has been flush. Rally back towards that falling 200 SMA here on the hourly chart. And then roll over again. So your hourly 200, your daily 21, your daily 200, the weekly 8, it all kind of lines up here in this neighborhood. 445, a big range, but let's call it 440 to 450. So I really can't give you a specific level here. Or rather, here's what I'm going to focus on. It's just kind of this neighborhood. 450-ish, 448-ish, 440. Hourly 200. Daily 21, daily 200, and you got your weekly moving averages. So key support here for the S&P is going to be 430-ish, 428. And I would look for resistance around that 448 to 450-ish level. Next up here is the QQQ. And your support levels here, guys, are all basically going to be the same. So we'll clean this up and we'll start fresh. So for support here, you're going to come back down towards those January lows. So I think a good psychological number is 340. So let me get the right drawing tool. Yeah, we'll kind of call it 340-ish. Hey, we don't got to be too anal about it. It's that neighborhood right there. So we'll call it 440. And then in terms of resistance, you have the daily 21. You have the weekly moving averages. And then on the hourly chart, the Qs have been a little bit weaker here. They haven't quite been able to test the hourly 200. But I would kind of look for resistance here under that level. 350-ish to 355-ish, you have your daily moving averages. You're getting close to the weekly moving averages and the hourly 200. So for the Qs here, we'll call it 350-ish to 355-ish. And obviously support's going to be around 340. Next up here is the IWM. Let's clean this up. We will start fresh this morning. For the IWM here, right, January support, so 192-ish, 190. And then for resistance here, the weekly AEMA has done a pretty good job of stuffing this thing here. So that's kind of like 205-ish to 210. So we'll call it 210, and we'll call it 190-ish to the downside. There's your key level of resistance. A bounce into that level I think is shortable. And if we end up breaking back under the January lows, I think things puke it up. So keep it simple. Keep it simple. We have what I think are pretty obvious levels of support for all the major indexes, and I also kind of think pretty obvious levels of resistance. Next chart up here, guys, is the VIX, and this will be a big one. We talked about this over the weekend, and it's just my indicator, so take it with a grain of salt. But I'm getting the first buy signal here since October of 2008. So it done been a while. I would say VIX, not a profound statement, but if VIX starts ripping back through that 38-ish level, I think we're making new lows. So certainly keep an eye here on the VIX. I think that's kind of teeing up for more. Just keep in mind, though, this whole market right now is very much news-driven. So while we do still want to take, the structure and the technicals, the support and resistance, while we do want to take all that into consideration, keep in mind one piece of good news, one piece of bad news could send this market either which way pretty quickly. So the key here is position sizing, and the key is good entries, whether you're looking to get long or short. So a pretty shitty entry if you're trying to get short, something like Thursday morning, where the market gaps down, you're getting yourself caught up in a short squeeze. And a pretty crappy entry is going to be if we bounce up to resistance, and then you buy calls. So you kind of want to play the extremes here as far as the emotions. When everybody's getting crazy bearish, probably not a good time to short, if anything, buy the dip. And then at resistance and everyone's getting bullish again, then you try to short it. So position size appropriately. Focus on good entries. Now, let's just say we do get the bounce. So the market kind of shrugs this off this morning. Not say it's going to, but let's just say it does. What if we get that follow through? What if we get that move into these levels of resistance? There is a way to play it. I think the key here is low risk, high reward. So for example, if you could go with Friday expiration, maybe some 440, let's see, 440, some 440, 445 debit spreads here, call debit spreads on your SPY for Friday's expiration. That's pretty good risk reward. Yeah, not too bad. Maybe 445, 450. Obviously much better risk reward. But if you're short right now, or if you're just, you're convinced we're going to get the follow through into resistance, those low risk, higher reward out the money debit spreads, pretty good way to go about it. Where you can risk, 1% of your account, maybe 2% to make 4 or 5. So a few things to take into consideration there. If the market bounces, implied volatility is going to continue to drop. So, and mind you, we're going to open up lower as of right now, like $7 to $8 lower. So prices will be different. Today's price is not Monday's price. But just for example, you could come to a debit spread, a credit spread rather. Maybe try to put some premium in your pocket. But all in all here, guys, last week's bounce did not change the structure. We still have bearish daily squeezes, bearish weekly squeezes, daily sell signals, and a volatility index looking like it's kind of foaming at the mouth here for round 2. So all things to take into consideration. Most importantly, it could all change any minute based on news, for better or for worse. So crazy world we live in. If you want a few news resources, and mind you, I'm never taking trades based off of news headlines, but if you're just trying to keep tabs on things here, Walter Bloomberg is a good source, and I like First Squawk. So, Russian nuclear triad takes up standby alert, blah, blah, blah. Not dull times, y'all. But listen, there's your pre-market prep video for today's session. I got a few things I got to take care of here before the open. But I wish y'all all the best of luck here today. Shall not be dull. So trade safe, trade smart, and I'll talk to you guys in the next one. Be good.